According to data from CMIE in FY24, unlisted non-financial companies' revenue and profit growth of 8.34% and 29% year-on-year beat the listed companies' sales and profit growth of 1.69% and 27.69%. Now, this suggests that investing in unlisted companies can be a gateway to new opportunities. But how can you go about investing in unlisted stocks? What are their advantages and disadvantages? We will discuss these and lot more in today's video. Hello and welcome to ET Money's YouTube channel. Today we will talk about unlisted stocks. Now we will cover 5 crucial aspects about them which are on your screen. Now this video belongs to our playlist of how to invest in stocks. To watch more videos in this playlist, you can click on the link mentioned in the description. Okay, let's start with understanding what unlisted stocks are. Now you may already know a stock or a share is an ownership interest in a company. When you buy and sell shares, you buy and sell ownership in actual companies. Now unlisted stocks are also ownership interests in actual companies, but these stocks are not traded on stock exchanges, so they cannot be bought and sold in the usual fashion. Now examples of some popular unlisted names include OYO, Tata Capital, Motilal Oswal Home Finance, Farm Easy, Big Basket, Boat, Care Health Insurance, Chennai Super Kings, NSE, HDB Financial and so on. Now unlisted stocks also include so-called pre-IPO stocks. These belong to companies that plan to list on stock exchanges. Such companies may have already filed a DRHP with SEBI. For example, consider HDB Financial, an NBFC and a subsidiary of HDFC Bank. The company has filed a DRHP with SEBI, so it is a pre-IPO stock. But who owns these unlisted shares? Well, unlisted stocks are owned by founders, employees, private equity investors, venture capitalists, and other early stage investors. For instance, consider NSE, an unlisted company. Now, as of November 2024, NSE had over 18,000 public and about 1,800 non-public shareholders. So, if you buy NSE's unlisted shares, someone from these shareholders is the counterparty. Now, the next obvious question is why you should invest in unlisted shares at all, especially when there are already thousands of options in the listed space. Let's answer this question in the next section. There are 3 prominent reasons why unlisted stocks matter. First, investing in promising unlisted companies can be pretty profitable if you enter them at an early stage. As their businesses grow, you stand to benefit as a shareholder. Now, this is different from investing in listed companies, as companies that list on stock exchanges have already achieved a certain scale and are hence past that initial growth phase. Second, unlisted shares can provide unique investment opportunities that aren't available in the listed space, especially in new age and emerging sectors. For instance, consider Chennai Super Kings. It's quite a unique investment opportunity that's unavailable in the listed space. So if you are a CSK fan who would like to own franchisee shares, you must take the unlisted route. Now, investing in new age sectors and companies can also aid diversification and make the portfolio more geared towards future trends. Third, investing in IPO-bound unlisted shares can preclude going through the IPO route where oversubscriptions are common and hence the allotment is uncertain. Plus, since IPOs are often richly priced, you can get the stock cheaper through the unlisted route. This can boost your profits when the company eventually lists. But unlisted stocks carry some risk as well beyond the normal risk associated with equity investing. First is the lack of liquidity in unlisted shares, which makes it difficult to both buy and sell shares. Now, buying and selling a certain quantity at your desired price is going to be doubly difficult. Second, there is generally a lack of information about unlisted companies in the public domain. Also, unlisted companies don't undergo as thorough scrutiny as listed companies do. Third, valuing unlisted companies poses its own challenges too. In the case of listed companies, the stock market acts as an automatic valuation mechanism where stock prices constantly adjust to positive or negative developments with the company, sector, or the economy. Now, because this mechanism is absent in the case of unlisted companies, the onus of finding the true worth is entirely on the investor. So, if there is an opportunity, there is the proportionate risk too. Next, let's see how can you invest in unlisted shares. If you want to invest in unlisted shares, there are quite a few options. First, you can invest directly in a startup. So if you know someone who has a startup or who is planning to launch one, you can get in touch with him. This is similar to what happens in Shark Tank. You buy the equity directly from the company's founder. Second, you can invest in a portfolio management service or PMS or an alternative investment fund that specializes in private equity. Such investments often have a minimum ticket size. For instance, PMS investments require a minimum of 50 lakh investment. Third, if you work for a startup, you can be allotted employee stock options or ESOPs. These are nothing but equity in the business. Fourth, certain brokers can facilitate over-the-counter transactions between the buyer and the seller. But all these are niche options that may or may not be available readily. The go-to way to invest in unlisted stocks is online platforms dealing in unlisted equities. Now, a simple Google search is sufficient to reveal their names. Most platforms are fintech companies, but traditional brokers like Axis Direct and HDFC Securities also provide this facility. So, the first step involved in investing in unlisted stocks is to pick the right online platform. Now, you can look at the platform's website, go through the FAQs, speak with the customer service, surf investor forums, talk to those who are already investing on these platforms, and so on. Once you are convinced of the credibility of a platform, you can make small investments through it to assess the ease of investing, quality of customer support, and the overall investment experience. Now, it's also a good idea to spread your investments across multiple platforms to reduce your platform-specific risk. In any case, since different platforms may have stocks of different companies, you may need to open an account with multiple platforms. Next comes the buying and selling process. Now, while there are variations across platforms, broadly the buying process involves 4 steps. Setting up the account that requires you to get the KYC done, booking or placing order for the shares you want to buy, making the payment, and getting the delivery of shares in your Demat account. Now, the delivery of shares can take anywhere between 24 hours to a couple of days to a couple of weeks, depending on the platform. Obviously, there are charges involved, including transaction charges, documentation charges, and stamp duty. And some platforms may also charge a markup on the actual price. Now, there can be minimum quantities to be bought for the shares on offer. If the lot size is too large, so will be the upfront investment. For instance, at the time of writing this script, the unlisted shares of Big Basket are available on a platform for 90.50 per piece and the minimum quantity is 2000 shares. So that's an upfront investment of 39 lakh. But the minimum quantities vary. So you can look at the various options to see which fits your budget. Now, there are platforms that say that they allow investors to buy even a single share or start investing with as low as 10,000. Now, as far as selling process is concerned, you will need to contact the customer service and go through the established process of the platform. Now, since selling the stock may take some time, it's advisable to invest in unlisted shares only for the long term. Invest only an amount that you can afford to keep locked up for the foreseeable future. Now, there are a couple of additional challenges with pre-IPO shares that you must keep in mind. First, if you're buying shares in an IPO bound company, your shares will be frozen for 6 months when the company comes up with the IPO. You can sell the shares only after 6 months. Second, IPOs can get delayed due to regulatory and other reasons, which can keep the shares in an IPO bound company illiquid for a long period of time. They can even be cancelled. Third, there is no surety that the IPO will come at a price higher than the price of the unlisted shares. For instance, consider Tata Technology. Its IPO came at a price of 475 to 500 rupees per share when unlisted shares were trading at 860 per share before the IPO. Next, let's talk about how you can analyze unlisted stocks. There is plenty of information about listed companies on the internet and financial websites, but unlisted companies don't get covered as extensively from the analytical standpoint, and this makes analyzing them more difficult than analyzing listed ones. So, be ready to go the extra mile when it comes to analyzing unlisted stocks. Don't skip research just because information may not be readily available. As a matter of fact, if you can't find much information about the company, that should be in itself be a red flag, as it can make investing in it quite risky. Finally, keep in mind that analyzing unlisted stocks is even more important than analyzing listed stocks, as you may not be able to quickly exit an unlisted company if your decision goes wrong. Since you will likely have to hold the stock for medium to long term, be certain about the quality of the company. A few sources can help analyze unlisted companies. These include the company website, which can provide a good deal of information about the company's business, the company's annual report, which can provide information about a company's business, management, strategies, future plans, competition, and financials. It's available on the company's website, or a simple internet search can take you to that. Now, online platforms that deal with unlisted shares also have ample information about the underlying companies. Some platforms also claim that they try to ensure fair pricing and valuation of the unlisted stocks available with them. Last but not the least, the good old online search, which can provide you with the latest news about the company, expert views, and other material related to the company. Now, how to go about researching unlisted stocks? Now, there should not be any difference between how you analyze a listed company and an unlisted one. So, the general principles of fundamental analysis will be applicable here as well. This means you need to assess the business, management, competition, financials, valuations, future prospects, etc., and based on them take an informed decision. Now, if you would like to learn about the principles of stock picking, you can check our related videos on this topic. The link is in the description. Next, let's talk about the taxation of unlisted shares. The tax treatment of gains arising from unlisted stocks is on your screen. Now, if you sell an unlisted stock at a gain before 24 months or 2 years, the gains will be added to your income and taxed as per the slab rate. But if you hold a stock for more than 2 years, the gains will be taxed at 12.5%. Now, do note that unlisted stocks don't qualify for the 1.25 lakh exemption on capital gains in a financial year. There is no indexation benefit as well. Do keep in mind this tax treatment, as it can impact your gains from unlisted shares based on your individual case. So, given all the information in this video, should you invest in unlisted stocks? Let's answer this question in the concluding section of this video. While investing in unlisted stocks has potential advantages, it also requires its fair share of due diligence and effort. Perhaps the biggest advantage of investing in unlisted shares is they help you get exposure to upcoming new age businesses and startups. But unlisted stocks may not be everyone's cup of tea. Only those investors who have sufficient experience with listed stocks and who can do the required research and have the required time and skill should consider investing in unlisted stocks. Even such investors should not go overboard on unlisted stocks. Allocate a certain portion of your equity portfolio to them and then stick to that allocation. It's crucial to have a long-term horizon with unlisted shares, as exiting them may take time. Last but not the least, use only credible platforms to invest in unlisted shares. Consider finding the right platform part of the overall research work involved in investing in unlisted stocks. Now, given all this, you can assess whether unlisted stocks make sense for you. And with this, we have come to the end of this video. I hope you found it useful. And if you did, please share it with your friends and family. I'll be back soon with another video. Till then, take care.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.